Getting approved for a mortgage with bad credit. If you have bad credit, the thought of qualifying for a mortgage can feel daunting. However, despite what you may believe, it's possible to secure a mortgage even with bad credit. There are specific types of mortgages designed to help people in this situation, and understanding the options available is key. Lenders look beyond just the credit score, considering other factors such as income, employment history, and debt-to-income ratio. Footnote: understanding these factors can help you navigate the mortgage approval process despite a less than perfect credit history. 1. Mortgages with fair credit. Having fair credit, which typically refers to scores between 580 and 669, doesn't disqualify you from securing a mortgage. While it may not put you in the same category as those with excellent credit, fair credit borrowers are often eligible for certain types of loans, particularly if they have the ability to make a down payment or show stable financial habits. In fact, some lenders specialize in offering mortgages to those with fair credit. Footnote: mortgages for individuals with fair credit can be accessible, especially when you meet other financial criteria. 2. Fair credit explained. Before diving into the mortgage application process, it's important to understand what constitutes fair credit. Credit score ranges can vary, but most credit reporting agencies define fair credit as a score between 580 and 669. This range includes individuals who have a history of missed payments, but who have managed to stabilize their finances over time. Fair credit does not necessarily prevent you from qualifying for a mortgage, it just means that lenders may apply stricter terms or require additional verification. Footnote: fair credit can still secure a mortgage, but understanding how it is defined will help you prepare for the application process. 3. Fair credit mortgages. Even with fair credit, several mortgage options are available. These options are designed to balance the risk lenders face with the goal of providing fair access to housing. Lenders need borrowers with fair credit, as it helps them maintain profitability while offering opportunities to a broader range of borrowers. For those with fair credit, loans such as FHA, VA, and conventional loans with low down payments are viable options. Footnote: exploring multiple mortgage options can increase your chances of approval, even with fair credit. 4. FHA financing. FHA loans are designed for individuals with credit scores of at least 580 and allow for a down payment at as low as 3.5%. If your credit score falls below 580, the required down payment increases to 10%. FHA loans are particularly useful for individuals who have experienced past financial challenges and need a more forgiving mortgage option. Footnote: FHA loans offer lower down payment requirements, making them a great option for borrowers with fair credit. 5. VA mortgages. VA loans are available to veterans and service members, and the best part is that there is no minimum credit score requirement set by the VA. However, individual lenders may impose their own credit score limits, often ranging from 620 to 660. These loans offer great benefits, including the ability to purchase a home with no down payment. Footnote: VA loans are a powerful option for eligible military members, with no down payment required and flexible credit requirements. 6. Conventional 97% financing. Conventional loans, like Fannie Mae's Home Ready and Freddie Mac's Home Possible Advantage, allow for a 3% down payment. These loans typically require good credit but can be available to borrowers with fair credit as well. Private lenders may also offer flexible underwriting guidelines for borrowers who meet income eligibility. Footnote: 3% down conventional loans provide an affordable path to homeownership for those with fair credit. 7. Going from fair credit to good credit. While your fair credit may qualify you for certain mortgage loans, it's possible to improve your credit score with a few strategic steps. Key factors in credit scoring include credit history, amount owed, length of credit history, new credit, and credit mix. By focusing on these areas and avoiding the temptation of opening new accounts, you can improve your credit score and qualify for better terms. Footnote: strategic credit management can quickly elevate your credit standing, making homeownership more accessible. 8. Monitor your credit improvement. Regularly checking your credit report is essential. Mistakes, such as outdated information or inaccuracies, can negatively impact your credit score. Address any errors promptly by disputing them with the credit reporting agencies. By staying on top of your credit and ensuring all information is accurate, you can boost your credit score and improve your chances of mortgage approval. Footnote: keeping track of your credit report and disputing errors can lead to significant improvements in your credit score. 9. Conclusion: with Fair Credit, you have several mortgage options available to you, from FHA loans to VA mortgages and conventional loans with lower down payments. While your credit may not be perfect, there are ways to improve it over time. By being strategic about your credit management, monitoring your credit report, and taking steps to clear up any inaccuracies, you can put yourself in a better position to secure a mortgage with favorable terms. Footnote: a proactive approach to improving your credit and understanding mortgage options will set you on the path to home ownership.